Welcome back to Trading 360. I'm Nicole Petalides, live at the New York Stock Exchange on this Friday. It's time for our 360 round. We want to take a look at the health of the consumer. We've gotten more information, retail sales, consumer sentiment, and the holidays are upon us. Rebecca Walser's with us, President, Walser Wealth Management, and Ed Siddell, CEO and Chief Investment Officer at EGIS Financial. Thank you both for being with us. Rebecca, let's start with you. So we see the data, we know inflation is hot overall, and if you sort of factor in the inflationary environment, it shows a slower spend, right?
Of course, yeah. Yeah, I mean, Nicole, I think that we've saw the numbers came out this morning that consumer sentiment definitely ticked up and that people are feeling a little, well, it's just surprising to me because I don't see a lot of good positive things happening to make consumers feel better. Maybe just the summertime, looking forward to the holidays, gas prices came down. I'm not exactly sure what consumers are seeing that makes them encouraged, but I am encouraged that they're encouraged because obviously the way people think is how they spend and shop. And we're a retail-based society. You know, we're a consumption society. So as consumers feel better, then our markets usually do better. And so that's what we're looking for. But unfortunately, Nicole, I think that this is only going to be a temporary blip up to the upside because I'm still expecting, especially with the United Kingdom and all the problems they've got going there, that we're going to have some currency problems globally coming to the U.S. as well.
And that's been a theme that we're already seeing from some of the big global companies. Ed, your thoughts on where the consumer is headed as sentiment and the big spend may be pulling back some?
Well, you know, I agree, but I think it's more than just increased spending. I think the reason the retail sales numbers are up is because, you know, costs are up. The cost of goods being sold are much higher as well. So I do think consumer confidence is down overall, especially when you look at the numbers. And that's pretty evident when, you look at the PPI numbers and the CPI numbers that came out earlier this week. I think it's going to be a transition all the way through the midterms. And, when we see possibly another rate hike of 75 basis points in November, that consumer confidence is going to continue to wane.
Right, and that's the whole point. And, the question is when people go to a restaurant, do they have the same tab? Do they get appetizers, drinks, dinner, and dessert too? Maybe buy a drink for a friend. I think behaviors are starting to change based on what we're seeing, but they are still expecting a good holiday season, Rebecca.
I know we need a Christmas miracle here, Nicole. Listen, if we can keep the markets going this way till the end of the year, we might have a decent holiday season. I definitely think people will have more of an impact. But the truth is, we know the European energy crisis and the UK pound is going to face imminent problems that are going to ripple to us. So I would love a Christmas miracle, and I'd love to get us out of this year without major economic news, but it's just not going to happen. We have major economic unravelings that are coming. They're coming this year. And, Nicole, we should have expected this for the last, I would say, at least 14 years. We have been stimulating to the upside with the Fed, and now that is unwinding. And this is the painful unwinding that we have pushed off. And eventually it has to come. And this is the period that we're in. We're seeing it with other currencies and other economies, and the dollar will not escape it this time, I'm afraid.
Right, and the truth is that customers are expecting, Ed, based on a report I read earlier on Bloomberg, that they are still expecting prices will climb going forward. They just don't see inflation coming back. I mean, I was looking at the basics with air travel, 40%, eggs, health insurance, and public transportation, 30%, bread, chicken, milk, 15%, new cars was 9%, shelter, 6%. These are rough, but you get the point, Ed.
Yeah, it's all the way across the board. I mean, even repairs on autos, everything is going up, and we all know it. We don't have to have the feds or an economist tell us that, we're in a recession and a high inflationary period because, when we go to the grocery store, we fill up with gas. Anytime we see a little bit of relief, what's going to happen is the feds are going to have to keep pushing up the interest rate, which is again going to stifle the market and put more downward pressure on consumer spending.
Ed, you did know that it could be costly for retailers this holiday season because of the inflationary environment. What's your advice to investors at this point? Do you like the group? Do you like the market, which has sold off, obviously a large amount year to date, down 24% for the S&P, Ed?
I think it's time to be cautiously optimistic. Having the overall plan, kind of taking a look at where you're at, and obviously depending on what the risk tolerance is for each person. A 1-year T-note is looking really good right now, to be honest. And is it worth putting your savings at risk between now and the end of the year until we figure out what the Feds are really going to do?
And Rebecca, you were looking at some of the sectors that, or names within the sector. You were talking about the upper end of folks in the socioeconomic brackets and that we're better positioned than Europe. And you think that luxury, for example, seems to be less affected. What names or what groups are you watching, Rebecca?
Well, Nicole, I'm not so much a big proponent of market holdings right now because I do still see some further pullback. And unlike going with treasuries and cash, I'm actually more on the hedging side, on the metals side, on commodities. So that's where we're temporarily using as a bridge to get through this long term. I was really encouraged with Delta yesterday coming out with their numbers. I think that we might have a decent earnings season, which would still be helpful for us, and we'd like to see that. But at the same time, I just feel like the headwinds for this quarter are going to be too great. And I think that people should really prepare. This is not status quo. This is not normal market, interference. This is much bigger. This is a resolution that's probably been 20 years in the making, and it's coming. And I just think people aren't really seeing that, and they're not really preparing for it. So people should be very cautious.
Okay. Ed Siddell, as we're looking into next week, we'll get more earnings, more bank earnings, right? Goldman Sachs will be up, but we'll have Hasbro and J&J and Netflix and Snap and Union Pacific, just to name a few. Also some Beige Book and some existing home sales and such. What are you expecting for next week after a week here that is relatively flat despite the volatility?
I think earnings may be relatively positive, but it is going to be short-lived. And I agree. There's just too much resistance. I think what we're experiencing now is going to actually go into 2023. We're not, as far as precious metals and some of the commodities, we're seeing a lot of, correlation in the market, everything going up and down together. And we think that has a lot to do with everything being oversold. And a lot of leverage in the market. So again, for us, we're really looking at it as being very cautiously optimistic.
Yeah, understood. It's great to see you both. Thank you for a great discussion. As we did see, sentiment was a little bit better, but inflation is certainly running hot. Rebecca Walser and Ed Siddell, thank you.